The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are.
Hello everyone, welcome to the Reckless Investor Show. Your host, Marquise Harding. So today we're going to look at Berkshire Hathaway's Incorporated Class B, not Class A, Class B, or ticker symbol BRK B. Raise my pop filter up a little bit. So let's look at the killer picture. Revenue growth has gone up by 37% from 5 years ago. Profit growth has gone up 59.19%. Profit margin has been good 100%. Gross margin has been 71.5%. Net income growth has been 73.19, 83.97 for net margin, and free cash flow is 24.68%, above where they were 5 years ago. But here's something I changed a little bit. Hopefully you guys can see it. But the price to free cash flow is now anything between 21 to like 23%. Or anything from 21 to like 25. Well, it would be orange or yellow. I don't have that color in Google Sheets. So they're just like, they're a little bit overvalued, but they're okay. So you want anything under 20. I said in the past 15, but let's go 22 and under for they're about good value. So again, price or cash flow, you take cash and you compare to cash and see if that cash or is fairly valued or overvalued or undervalued. And this stock, the Berkshire Hathaway, is a little bit overvalued, but it's fine. Because you can't manipulate cash like you can with PE. You can add all the numbers here or there. You can change the numbers. You can't change cash. Free cash flow yield, just barely outside our range that we want. We want 5% or higher. Debt to free cash flow is good because they can pay off all their debt with their cash flow now. Take their total debt and divide it by the free cash flow they have. Roughly about almost 4.3 years until they can pay off all their debt. They're increasing the shares by 14 million from what they were 5 years ago. So it's roughly 1.07% dilution. The return on invested capital, another one that's a little bit outside the range of 8.08%. You want 10, but that's not really going to hurt you in my opinion. Then the return on equity is 12.43. Return on equity is Warren Buffett's greatest unit of valuing company or stock, according to Warren Buffett. That's his favorite one. That's 12.43. Alright, you probably see right here the fair value is high. But before we go into that, let's look at the forecast. I was checking on B. So the high is 391. The average is 379. And the low is 376. There's 10 stock analysts on they're analyzing Berkshire Hathaway's stock B, Class B. But here's the problem I'm facing with this. They don't have any revenue forecasts, which I use for my discount cash flow model. So I'm not getting a proper reading of what the fair value of the stock is. I can't really say. This is from the BP video, which I'm going to leave up in the top right corner. So I'm not really sure what the fair value of this company would be. I have here the forecast for the on WallStreetZen.com of average 1 year forecast is 30.9 billion, 32.2 billion. The Berkshire Class B revenue is forecast to grow at the rate of negative 69.81 per year, which is not exceptional. But, well, like, what can we do? But, so let's count the gut check score. So, I have to draw a line. Because this isn't green, I have to say no. 1, 2, 3, 4, 5, 6, 7, 8, 9. So it goes here. 9. And that's pretty much it, folks. Just let me bring this down. But you take care, folks.